Okay, it's 4:04 p.m., April 5th. Let's call the meeting to order. And the first order of business is a roll call.
Okay, and committee member Bowman,
Here.
and committee member Kerr,
Here.
and chair Trainer,
Here.
committee member Papalia,
Here.
and vice chair Priven.
Here.
And for the record, Vice Chair Priven is using the I think she said AB 224 exemption for family emergency to appear remotely. And that's what I had to say.
Okay. All right. So I'll read the land acknowledgement to start the meeting. The city of Albany recognizes that we occupy the land originally protected by the Confederated Villages of Lisjon. We acknowledge the genocide that took place on these lands and must make strides to repay the moral debt that is owed to this indigenous people, specifically the Ohlone tribe. We thank them for their contributions, which have transformed our community, and we will continue to bring forth growth and unity. The city of Albany commits to sustaining ongoing relationships with the tribe and together build a better future for all that now make this their home. And then I'd also like to just acknowledge that today is the first day of Passover. And as a result, we're starting the meeting as early as we could. So that's the 4 p.m. start. Okay, so the next item up on the agenda is item number 2, approval of the minutes from the March 1st, 2023 meeting. Do you have a motion to approve the minutes? I'll move to approve the minutes.
I'll second. I wasn't there, but I don't think I need to.
Okay, and committee member Bowman. Committee member Kerr,
Yes.
chair Trainer,
Yes.
committee member Papalia,
Yes.
and vice chair Priven.
Yes.
Motion passes.
Great. Item number 3 is the item for announcements for staff or committee member announcements.
I have an announcement. Did we all get a notice from the city about the community expo? Inviting us to part, if we wanted to participate. I replied yes. And so, because if no one's, has anyone been to one of those? It's kind of a good way to meet other people who are kind of active in the city and are involved. And plus new people are coming to the expo. So I think it's on the 29th of this month. And I just want to get us, our FAC out there, our faces out there for and I guess we won't be able to discuss it, but if you have any, is anyone else interested in participating in that?
I will sign up for that.
Okay.
So I know we can't discuss it because it's not agendized. So we'll just leave it at that. There is
Announce that you will be there.
Yeah.
yeah, I will sign up for that.
I also will be
And,
there. So.
there is an email that went out about that. So please respond if you're so inclined. Okay, any other announcements? Okay, so then let's move to section 4, which is the public comment section of the meeting. We did receive an email from a member of the community about a viability study for the Public Bank of the East Bay. So that is available on the meeting agenda. It's linked if you would like to read that.
But she's here.
And she's here.
Hi, my name is Margie Marks. And I really want to thank Heather because I had all kinds of problems with my email and she helped me with that. I want to thank Judy because she called and acknowledged she got it. And I really want to thank Francesco because he told me the meeting started early. So, which I didn't notice. I sent this, it's a viability study for the Public Bank of the East Bay. I know you're going to work on your work plan tonight, so I would hope that you would include looking at this as a possibility for Albany. This is the viability study for the Bank of the East Bay. There are like Santa Rosa has it, Sacramento has it, San Francisco. There's all these.
Margie, could you get a little closer to the mic,
Oh,
please?
sorry.
That's better.
Okay. There is a California Public Banking Alliance. And well, actually, this one is from the New York Banking Alliance. I'm just going to read the headlines. Public banking promotes fiscal responsibility, safe, sound, equitable, strong regulatory, led by qualified independent professionals. And if you look at the California Public Banking they talk about what the benefits of the public bank are. I just want to go through those quickly. Invest public money locally, return profit and interest to local communities, reduced bank costs. There's Oakland, that's part of this bank. They said they'll save $60 million a year in interest payments. Invest in community priorities and values, promotes transparency, strengthens local banks and credit unions. One of the questions I got from Judy was, what about these local banks that have been really good to the city or partnering with us? Part of if you go on the California Public Banking Alliance, they talked about how the public bank can partner with local banks and help them with to back loans and other things. It would create a multi-generational source of income. North Dakota has had a public bank for over 100 years. That state fared better than any other state during the 2008 financial crisis. The Public Bank of the East Bay is going to open. I would ask you to put this on your work plan and at least look if it's something that would work for Albany. Maybe it wouldn't work, I don't know, but I would love for you to there's a Friends of the East Bay Public Bank. You could get someone to speak from there. You could get someone from the state of North Dakota to speak on Zoom. I mean, I think the public would be interested, in a public hearing to talk about the public bank and what it means and what it would do. So, okay, anyway, I don't want to take up my time, but thank you very much. And I brought you a special Passover treat because I was rushing around getting ready. It's my family's favorite Passover dessert. So, if you don't go with, I want you to, but it's called arts and crafts. That's what
Now I'm doubly sorry I'm participating remotely.
Thank you.
We won't consider this any kind of bribe.
Well, I was rushing around trying to get everything ready for my Seder. So it's like, I would make, get this ready, I have to come here. I'm sure you don't get
Never. It's the first ever.
it. Okay, thank you.
Thank you for your comment. All right, thanks for your comment. Is there any other public comment? No. Okay, so there's nobody else calling in by Zoom. Okay, so then that brings us to number 5 on the agenda, which is the presentation of the fiscal 21-22 certified financial audit report.
We do have our auditor here, Paul Pham. He's from Siobhan and Associates, and they have completed our audits since fiscal year 2019. So Paul, I'll let you take it away.
All right, thank you. Thank you, council members and Heather for inviting me out to share with you the results of the June 30th, 2022 audit. Am I able to share my screen, Heather?
You should be able to.
Okay, great. All right.
It's
Okay, so
there.
You see the PDF of the audit report there? Okay.
Very small, but it's there.
Okay, I'll zoom in to the relevant sections. So what I'd like to do is kind of start out and hit on some of the key financial highlights. But Heather, did you want me to cover the audit process a little bit? Do you have new members here that might benefit from that?
That would be good. We have a range of financial literacy and the public, so that would be good. Great.
Okay, all right. So we adhere to several different standards when we perform our audits. There are generally accepted auditing standards out there that are issued by the American Institute of Certified Public Accountants. And because the city is a local government, we also adhere to generally accepted governmental auditing standards. Those are issued by the Government Accountability Office. They issue auditing standards as well. So our audit, we do it in a two-phase approach where about halfway through the year, we'll come out and we'll assess the city's internal controls, get an understanding of how the processes are, and we do some sampling and testing of those procedures to make sure that the controls that were designed were properly designed as well as properly implemented. And then after the year's over and the city's had a chance to close their books, we'll come back in and we'll perform substandard procedures and analytical procedures, among other things. And then finally, we do a final analysis of the results and we issue the report. So if I can reference you to the statement of net position. So this kind of gives a idea of how it's analogous to like a balance sheet for like a commercial client. So what you see here, I want to point out a couple key things in the current year that you don't normally see. So to start with, what you see is there's a $6 million increase in the city's net position, which you see down here.
Excuse me, Paul.
Yeah.
I'm sorry to interrupt. Is there any way to make that bigger? I can't read it at all.
Yeah, let me see. Sure. Did that help?
Yeah, that's better. Thank
That's
you.
much better.
Okay. All right. Great. All right. So a couple things. Okay. So the main changes you see in the liabilities, you see that the liabilities went down by $16 million. And you also see that deferred inflow of resources went up $15 million. And this is mainly due to the city's pension plan. So I'll show you in the debt section, we've got this schedule that illustrates. So you see here that the pension went down $15 million. So the way this works is that the pension plan itself, they have actuaries that go in and issue a valuation, and those are done a year behind. So from our audit perspective, we're 2 years behind because the pension plan's audit actuaries used information from 2 years ago, issue this valuation, then we come in and we use that valuation for this year's audit. So if you think back 2 years ago, the market did really well. And so what you see is every time the city or any member in the plan makes a contribution, it gets invested. And those assets had huge returns. And so that lowered the overall net pension liability. But then, as you know, the very following year, any gains that the investments made went away. So the way this works is when they do these actuaries, they establish certain expectations. So one of the expectations or assumptions is the return on investment. And when the actuaries are wrong, when the actuals aren't what is expected, that difference is recorded as a deferred inflow of resources. And that's amortized over a period of 5 years. And so that's why you see the offsetting increase in the DIR, deferred inflow of resources. Right here. So you see this. So overall, it kind of washes itself out. But what you can take away from what I'm saying here is that it's a temporary thing. It's just a book entry. It's a timing difference due to market fluctuation. So in the next audit, you should expect to see the complete opposite of this. The liability will go back up, the deferred inflows will go back down. And so that's going to be the big change that you see there. One other thing I wanted to note in relation to these fluctuations in the market is your investment earnings went down quite a bit. And a big, but you're still getting the same returns in terms of the interest income. But what you don't normally see is the big unrealized loss in your investments. And so you'll see that in the investment earnings, they've gone down. So again, that's just a book entry, that goes up and down depending on what the market is like as of the end of the fiscal year. Okay, so that's kind of a unique one that doesn't usually have a significant impact on the city. One new thing this year is GASB 87, and GASB 87 rolled out this year, and what it did was it redefined the way we look at leases. And so the district does have a lease, and so what you see that you haven't seen before is you've got this leases receivable on in the general fund on your balance sheet. And then you've got this offsetting lease deferred inflow of resources. And so as the city receives these lease payments, these will get reported, amortized accordingly based on that. And then down in your fund balance classification, this is also a new line item as a result of the GASB 87 implementation. And for more detail, there's a schedule here. And so with this implementation, it's a retrospective implementation. And so as of the beginning of the year, this is what you would have been at. And so this resulted in a $2,565 prior period adjustment. Sorry, I should zoom in on that for you. Very minimal adjustment to the fund balance at the beginning of the year. So yeah, so those are the big key items that we noted for this this last year. Are there any questions I can entertain before we go on to the audit results?
Does anybody have any questions? If not, I had just one related to the lease standard, the new lease standard that you mentioned. Not really too familiar with governmental accounting standards, but is that similar to the new ASU for lease accounting for like nonprofit entities that requires lease capitalization of any lease over 12 months in duration? Is it the same type of a thing?
Yeah, we're expecting that the same on the under FASB as well. Yeah, so GASB, that's exactly. So in the old standard, for those who have a background in accounting, so they used to have capital leases and operating leases. Those terms went away. So now you've got your purchase finance agreements, and then you've got these, which used to be operating leases. You have to go through a whole analysis of whether or not it falls under GASB 87. So that's the big part, is really those operating leases. A lot of them in the past have not been capitalized, and because of 87, that's what you're seeing here on the lessee and the lessor side.
Who are the lessees of the city?
We have a handful of people that rent space at different facilities.
Yeah, and this one in particular, I believe it's the preschool. Does that sound right, Heather? I can look it up.
They're both preschools. There's two different
Okay.
preschools that rent space from city buildings.
Okay, thank you.
Okay,
I have a question. So when you talk about going through the audit results, are you going to go through the basic financial, like the statement of net assets and whatever, or?
Oh, no, I was going to go into our audit opinion, but if you had, I can go further if there's anything you'd like me to cover. Did you want to?
Could you just
yeah.
show it again real quick?
Yeah, absolutely. Yeah. Okay. You want to see the full statement of position? Is that what you said?
Yeah, I think that's, if you could just give us a run through of the statement of financial position and statement of activities, because this is the first time we're seeing this, so.
Oh, sure. Yeah. Okay. Let me, I think the most useful thing is if I can go through to the summary, that'll give you kind of a snapshot of what that looks like. Okay. So here's the statement of net position when it comes to your governmental activities here in these two columns and then your business type activities. So you see, I'm sorry, this is the statement, the statement activities. Here's the statement of net position.
Can you zoom that in just a little bit more?
Yeah.
Thank you.
So are you going to walk us through, or should we just ask questions, or how do you want to do this?
Yeah. So the big, you see here the your total assets increased here about $5 million. Deferred outflow of resources. Most of these are going to be related to your OPEB and your pension plan adjustments here. So that's pretty fairly consistent. So the liabilities we discussed here, most of that is going to be due to the GASB 68 for your pensions. And then the big change here, again, as we discussed earlier, is going to be a result of that GASB 68 adjustment for your pension. But net position wise,
Well, go ahead.
Net position wise, your net investment in capital assets are fairly consistent as well. Not a lot of big changes here. You guys did purchase the fire truck. So right now that's sitting as a debt and a prepaid because as of the year end, the city hadn't received the fire truck just yet. And this deficit in the unrestricted, that happened when GASB 68 rolled out a few years ago. So that put the city under that deficit because the restrictions here are going to be restricted by either law or contract or grantor. And so because of that, the implementation of GASB 68, you'll see these deficit numbers in the unrestricted.
And I do want to point out the business type activity, that's our sewer work. That's the only thing under that.
So let me see if I can repeat this back to you. So when I look at the first two columns, 22, the government activities, 2022 and 2021, and towards the middle there, the non-current liabilities, it's a big change. And if I understand that right, it's really a change in assets in the pension fund, but because you show the pension fund on a net basis, assets minus liabilities, it's showing up as a change in net liabilities. So in other words, the assets went up a lot really through 2021, but you're booking that because of the year lag that's showing up in 2022. The assets went up a lot, and that reduces the net liability, and that's why it's showing as a reduction in net liability. Is that right?
That's perfect. That's exactly it. Yeah.
Okay. So, and does this have all the pension plans? Does this have the city's pension plan as well as the other ones, or?
It does, but the main impact is coming from the CalPERS.
Right. Okay. And then, so then when I go up to the very first line there, current assets, current and other assets, there's a pretty big change there. So what's up with that?
Most of that's going to be in your cash and investments, just due to your operations, your net, revenues over expenses. So as you see here, let me zoom out a little so you can see the whole schedule. So as you can see here, overall, the city under government activities did have an increase in that position. And so because meaning it had more revenues than expenses. And because of that, that resulted in the city accumulating more cash.
Okay. And then one more question when we go up
Sure.
to the assets.
Yeah.
So they're the capital assets, like, is that like buildings and things like that?
That's correct. Yeah.
So how often do those get revalued?
The city did just recently have a revaluation. This last year there was further adjustments made, and this is coming off of our prior audits where we made the recommendation, to have this done and kind of get the city to a good baseline so that going forward, the assets are properly tracked and depreciated. And a big part of that, if you can see in the adjustments I just explained, is going to be the result of this 1.5 million. This is with the city going in and doing further analysis of what really it should be at and what assets are still there. The depreciation was set properly. So yeah, that's a great question. Yeah.
We're holding capital assets at cost though, right? Net of depreciation?
That's right.
Okay. So when we talk about revaluing assets, I think it's really an effort to make sure that they're properly depreciated and that those net carrying values are right. But in terms of, if you were to go out and look at the market value of the land and the buildings, I'm sure they would be higher, but generally accepted accounting says that you hold these things at cost.
That's right. Yeah.
This is also where I start talking and all other accountants are like, oh, because personally, from a government point of view, a lot of this doesn't affect our day-to-day, because what you're really looking at here is, in theory, if we were to sell everything in the city today, what would we get for it, right? And so I don't think we're gonna, do that anytime soon. So it's really just an idea of, how much work. How I look at this is, what is Public Works doing? Are they continuing to, maintain the roads and add value to our infrastructure? Are they, are we making sure we're keeping up to date on our building maintenance and all of that? So if you see it going down drastically, there's something wrong. And if you see it, slowly climbing, it's because we've been keeping up on our maintenance and everything. But from a larger planning point of view, every accountant hates it when I say that this is not my favorite schedule.
I have a question on the relationship of the capital assets line item in the assets to the net position. So I'm unfamiliar with the, in the net asset section, net investment in capital assets, and I can't see the numbers well enough, but they don't look like they're the same.
Yeah. So the net investment that you see. So for those just so everybody knows what the question. So the question is why does this line not match up with this line here? So the under the net position, this is net of related debt, because the city would issue debt in order to acquire these assets. And so this number down here is that calculation, is the net capital assets less a related debt, because the liability, the debt, is sitting in here.
And when you mentioned, so you briefly mentioned GASB 68 as causing a restatement in how this net position, this equity section is working. And can you explain that a little bit more? Because it is, it's concerning when you see a negative unrestricted net asset, but I imagine that is a result of breaking out the net investment in capital assets from that number that's causing that.
Yeah. Okay. So you're at, so I just make sure I understand you, but you're talking about way back a few years when GASB 68 rolled out, right? That's what you're referring to, and why this is negative?
I guess I was just kind of repeating back what you had mentioned a few minutes ago, and I didn't really understand what that was, that standard, and but is that responsible for this negative unrestricted because we're breaking out net investment in capital assets from otherwise unrestricted assets?
Well, not necessarily. So so what this is prior to GASB 68 that rolled out a few years back, the PERS plan, the liability, the assets and the liabilities were accounted for at the state level, right? And GASB 68 said, really this needs to be reported at the local agency level. And because of that, local agencies had to report it on the face of their financial statement. So on the statement of position, they had to reflect that. And basically what this is saying is that the pension plan is underfunded, right? And so it's got a huge liability, and most agencies don't have the corresponding assets to offset it. And so, or at least unrestricted to offset it. This doesn't appear for all local agencies, but it did have a big hit on most agencies' net assets when GASB 68 rolled out. And so as a response to that, some agencies have set aside some money for it. They have set up pension trusts. They have made additional contributions. But the pension plan itself does have a contribution plan to, you over the years, as you've seen, contribution rates have increased. The state has kicked in more with more on behalf contributions, all on the employer, the member side. So that's all part of the plan to bring this liability down. And just for your purposes, though, similar to what Heather was alluding to about just in terms of day-to-day operations, right? This is really a book entry. It doesn't impact the city, in what it does. The piece of it that does impact the city, and when you're looking at the funds, is the contributions that need to be made, right? Because the contributions are your current expenditures that you put into the pension plan from year to year. So that's really the key thing that most agencies will focus on, because that liability is going to be there. It's going to go up and down based on market. It's going to go up and down based on contributions, things of that sort. So, yeah.
It's really helpful. Thank you.
And Paul, can you remind me, when did that go into effect, when cities started to actually have to put their pension liabilities on their financial statements?
Yeah, that was, here, I'll show you there's a required supplementary schedule here. So it came out in 2015. And so it's required to be reported 10 years. So we're not even at that 10-year mark yet, but there's this schedule here is the required supplemental, the contribution schedule. And then on the next page is going to be the city's share of the pool. And so this is where the actuaries come into play. They determine, here's the city's proportionate share of the pool. Here are the assets, your liabilities. So, and as you can see here, there's a big change right here in this last year.
I can't see those numbers, sorry.
Oh, okay.
No.
Okay.
So,
33 and 19.
yeah, that's.
Yeah.
Oh, that's better.
Okay.
Basically, we can only see if there's no gray on the screen. So zoom in one.
Oh, you mean like the sidebars? If
When the
those,
sidebar is there. Yep, perfect.
I see. Okay. Wow, that's interesting.
Okay, does anybody have any other questions on the statement of financial position? Right, so Paul, maybe we can move on to the next statement then?
Yeah.
Excuse me, I have one question. Paul, is there a reason why we didn't get a copy of this for our meeting?
Yeah, that's, I take full responsibility for that. We've had some tremendous staffing issues this last season, and it really put a bottleneck in our workload. And not only did we have these staffing issues during our busy season, but now that we're able to hire people on, there's that learning curve, there's that training that we have to do at this point. And so it's kind of built up. So yeah, it for those who are familiar, who are in the industry, who've tried to hire accountants, it's very slim pickings. It's very difficult to find good accountants who do what we do, because we're in a very niche market with governmental accounting. So one of the things about it is, it's not like we can call up a temp agency and get help. Right. It doesn't work that way because of how technical our field is. And a lot of times, just asking for that additional help, it tends to not be fruitful. It might end up adding more work, but because, if you don't bring in someone with specific governmental accounting and audit experience,
I'm sorry, I don't know if you understood my question. Is this a PDF format that could have been shared with the committee? What you're showing us, is this the audit? Is this the final audit?
No, no, this is the audit report. What we were, the plan was to go through, share this with you, see if there's any changes that may need to be made. And then at the council meeting, we would present the final draft of the report. So yeah,
so you didn't, no one asked you to provide a copy of this ahead of time so that it could be shared? Because we were literally notified by the city that this was coming when this was posted on Friday. And I kept checking it, every other day or so, and throughout the day today, and kept waiting for it to come so I could review it ahead of time and have some, heads up on it. And now we're seeing it for the first time, and I don't understand what happened. So you were not asked to send a copy of this to the staff here so that they could share it with us?
No, that's not correct. I was asked to do that. And unfortunately, I apologize. I was not able to meet my end of the bargain and get that to them in a timely manner. So I take full responsibility for this being late.
Isn't this just attaching it to an email? Is it a strange file? I'm sorry to be belaboring this, but I'm kind of upset that this information wasn't, this is the main thing on our agenda today. And it's just FYI, I can't read this very well because I'm at an angle and I have a little distance vision problem here, and you're throwing stuff up on the screen. And I just don't understand, again, why you didn't attach this and send it to Heather so that it could be shared. It's just attach and send.
This
Sure.
is a draft, and
What?
this is a draft, and we haven't finalized. There's a number of disclosures and management discussion and analysis pieces that we have not finalized yet. So we didn't want to send it out without making sure that everything was in order.
Well, you put draft on it, and then we get to, okay. I don't know if I have to repeat this. We were told something on Friday, okay? I sent you an email this morning and you said, we'll send it to you as soon as we get it. And I'm upset because I'm not an accountant. And I like to be able to review this ahead of time. And the public has the right to have this attached to our agenda, so that they can have it there and they can review it at their leisure. And I don't care if you put a little, everyone knows what draft is, and you could put a little diagonal draft on many pages of this. But I keep hearing reasons. First, it's either we don't have the staff, or now it's, well, we didn't want to, but I think it's, kind of, what's the word I'm looking for? A lack of transparency to not bring this to us ahead of time. Okay, I
was
made my
not the
point.
intention. I-
It's the result. I'm,
If I can interject, I understand where you're coming from, and I guess the word for me is frustrating, I guess, to not have this. This is a really important document. It's lengthy. And we need to be able to review it. And I don't feel like I can sign off on this thing, based on looking at this for 45 minutes. And I don't know if is there a way where we can actually get the document now? And then
Yeah,
today is the time for the public comment, but I feel like I need some time to sit with this and read it and digest it. And I don't feel like I'm going to be able to, give my blessing to this thing like in this meeting.
Heather, would you be able to forward them the copy I sent you earlier?
I
There's that,
I didn't get the financials. I just got the note disclosures.
no, you have the full act for right now.
Oh, okay, I'll look for that.
Yeah, you can share that
when
with
is
them.
this going to be presented to the council?
It has not been scheduled yet,
Okay.
but I was hoping to get it before the budget went forward.
Well, no, so we don't meet for another month. So were you planning on presenting this to the council before we meet again?
I was hoping to bring it to them in the April 17th meeting.
Oh, so this is just a waste of our time. This is an enormous waste of our time. And our job is to advise the council. And we were not given the tools to do that. And there is not a valid reason why we weren't given that information, as far as I'm concerned. And I'd also like to know how much they're getting paid for this. You're getting paid to do your job there, and our time is valuable. And, we may not get paid, but I put aside a lot of time for this, and I'm prepared to go through this stuff. And I think you've shown great disrespect to this panel by not giving it to us in a timely manner. And I'm not interested at all about we don't have the staff or any of that, or it's just a draft. Because if you should understand what the purpose of this meeting was and how it needed to be here in a timely manner. We went through this a month ago in the March meeting. It was on our agenda a month ago, and we were told it wasn't ready. And so now a month later, it's on our agenda. And I'm telling you, I was anxiously looking for this multiple times.
Francesco, if I may,
God,
I do understand your frustration. I share it with the rest of the panel, but I think your point is made. So I'd like us to move ahead and move through this agenda item so that we can continue the work that we need to do.
Me too. I think we should move ahead as well as we can at this point, but at the end of this presentation, I'd like to talk about, is there any mechanism for us for this to be delayed until we get a chance to really look at these financials?
We can look into scheduling a special meeting. In your May meeting, the next biennial budget is supposed to come to you. As soon as I get it, and it is going to be posted to the website. And, once I make sure that, our responses to everything are correct. And so it will be available to everyone at that time. And like I said, I really wanted all of the information to be available prior to the budget coming. And so I'm trying to cram everything in.
Right, I know. And the next meeting is really going to be a busy meeting with a lot on the agenda, but I'm trying to figure out, given the situation, which is not ideal, how do we move forward and give constructive comment on these financials? If you feel like you do have to move this ahead on the April 17th council meeting, we're not allowed to talk to each other outside of this forum. So that only leaves us, we individually review and send email comments to you, I think.
Yes, and those comments could become public comment on the council agenda. And I can incorporate anything that you have including your frustration, into the staff report when I bring it to council. And then we can talk about bringing it back after May. Again, I know that that is backwards, but we can talk about when we can bring it back.
Okay, well, so why don't we just move on through the rest of Paul's presentation of this, and then everyone on this committee needs to know that we need to review this on our own and send our comments to Heather for inclusion in public comment to the council for their next meeting. Okay, thanks, Paul. Could you please go ahead with the statement of changes?
Yeah, absolutely. Okay, so in the statement of changes, the big change you see is that there was an increase in the operating grants this year of $1.9 million. That's the big change. And then under your general revenue, so these are your program revenues up here. These are the ones where they support the city's activities. General revenues here, which include your taxes and investment earnings as well. The big change is the increase in your taxes. When it comes to the expenditures, the big changes down here are going to be in your public safety. Last year, you did see a big increase. So really, what this is bringing it back down to your normal levels. And then you see increased activity under your recreation and community service expenses here as well. So so that overall, then what you're seeing is an increase of about $7 million over last year on the business type, the sewer activities. Right here, the big change is going to be in the sewer operations. And again, this is kind of an offset from last year's activities too. So.
Does the committee have questions on this? If I could just ask a couple questions. The operating grants and contributions revenue is up by, it looks like about 1.9 million.
Yeah.
Is that ARPA money, or what accounts for that increase?
Yeah, that's ARPA made it was a big part of that increase. Yeah. The CARES funding.
Yeah, we have several, I think I brought last time, and I requested an increase to the finance professional services budget because we're working with a grants consultant. And they are also helping us write different grants for community development, public works, and safety.
Right, so that seems like a good investment, right? If they brought in $1.9 million worth of grant money or possibly more, it seems like that position is paying for itself. On the expense side, Paul, you mentioned that that the police expenses were greater and that they were sort of normalizing again this year. I see they're down by about 2.4 million and fire's down by about 2.5. And I was under the impression that that some of the open positions had been filled recently. So I thought the expenses would be up, not down.
They were. So some of this includes non-operating expenses. So if, the fire truck, or they buy equipment, or, things like that, that you don't necessarily see in the quarterly report from the operating, some of that is in here. For example, police generally pay for their vehicles out of their COPS funds, which they get from the state, that have to be used directly for frontline policing. So some of that is, changes year to year.
Wouldn't that go on the balance sheet though? Buying vehicles and fire trucks and things?
But there's going to be a lot of non-capitalized assets, smaller equipment and supplies that are bought. Yeah, it definitely, 21 was the high, because if we look back at 2020, they're really close to these levels. They're around 7 million and 5 million respectively for police and fire. So I can take a look to see what last year made these increases in 21.
Okay.
And
And then-
Cassie made a good point. Some of this is obviously from June 30th of 2022. So some of those hirings happened after. And then again, some people have left now. Like it fluctuates a lot, but I think the hiring is more in fiscal year 23 than in 22.
Would it be overtime related? The fact that it was high in 21, would that be contributing to that number being that high?
I can, for fire, yes, because that's true. There weren't as many. Oh, no, well, I'll have to go through and double check when there was like mutual aid and all of that kind of stuff.
I think it would just help us to be able to process this, to have, the big variances like that, just sort of a couple bullet points to explain what's behind those larger variances.
I'll look through that and make sure to put it in my memo when I.
Okay,
put everything together.
that'd be great. Thank you.
Okay. Were there any other questions on the schedule?
I don't think so. I think we can move on.
Okay. All right, so this is going to be related to your fund balance. So in terms of the day-to-day operations, this is really what the city operates on is at the fund level. And so what you see here is the summary of the revenues for the general fund. These are your major funds here. The general fund is always going to be a major fund. And then your street and storm fund is a major fund. And then all the other funds are collectively reported as non-major in this column. And so just to give you an idea, there's more detail on it here. It breaks out the revenues. Okay, and then these are your capital assets here. So these are reported as at net. So not a lot of big changes here. You see the decrease here. Most of this decrease is going to be attributed to just the depreciation expense in the current year.
So what's the difference between governmental activities and business type activities?
So the business type activities it's going to be your sewer fund, and so this fund in particular operates like a business, right? So it relies a lot. If you see, let me go back to a previous schedule here. If you see here, a lot of what the sewer fund brings in is going to be your charges for services. And if you look at the other stuff, it doesn't have the tax revenue or the investment earnings are pretty insignificant comparatively. So this makes sense for a fund that operates like a business, right? They charge a fee for a particular service. So these right here will rely more heavily on your general revenues, right? Even though there will be some program revenues in the forms of grants and whatnot, there's going to be a tax revenue that's a pretty substantial part to support your operations. So it will not operate like a business.
In general, the business type activities are anything that is funded fully by fees. Like he said, so currently sewer is the only program. We've been looking at storm drain to decide whether it qualifies, and it doesn't currently. But that is something that is on the radar to see. They're doing a fee study soon, and those rates will be adjusted, and that might transfer in the future. But those are really the only two things that, when I looked at neighboring agencies, they have on their business type activities is sewer and storm drain.
Is there an advantage to having it in that business type activities section, columns?
I mean, it's more work on the bookkeeping side.
Well, here's the thing with it is that that fund will need to be self-supporting, right? If you're trying to decide if the storm drain should be an enterprise, a business type activity, it can't really rely on like the general fund to kick in, if it should have deficit spending, right? It really should be self-sufficient from the fees it collects. And then, so that's a good metric for determining whether or not a fund should become a enterprise fund.
Because we're using that as an example, are you able to share which fees contribute to the storm drains for sewer operating
Sure.
expenses?
So the sewer fees are on your property tax bill. They're not a tax, they are a fee. They were determined by a fee study, and they are for the service to each residence based on square footage and a number of things that are more towards the engineering side. And then the storm drain, there is a portion of a fee, but it hasn't been updated in a very long time. And it doesn't allow for a cost of living adjustment. And then the rest of storm drain, because street and storm drain fund, there are a handful of parcel taxes that contribute to the storm drain, as well as I think there's a county or state level tax that also supports the storm drain fund.
Got it. Oh, that was helpful.
Okay, thank you.
I think we left off here. Was that did that answer the question about the difference?
Yes, thank you.
All right. And so, so the last thing I was saying was that this decrease here is mainly from the depreciation expense. So this is going to be the summary of your long-term debt here. And so again, the government activities has its own debt that you see. The parcel tax was paid off. It did have a reserve, which got liquidated at the full maturity of this note. This decrease here is just going to be your regular payments as the principals became due, and same with here these other items too. This is the new debt that for the new fire engine, the pump that you guys have. And then under the business type activities, so this service center lease is split between the sewer fund and the government activities. So you see that twice here. So this in total, this line and this line together is the total debt on this service center lease agreement. And then the sewer fund has its own refunding bonds that it issued. This decrease is just due to the maturity on the principal. All right. So those are the statements. The ACFR is an annual comprehensive financial report, and so there's quite a bit in here in terms of statistical data and other information that you don't typically see just on your standard financial statements. So you'll see that at kind of the end, at the very end of the report. So it starts here with the statistical data. So it's broken out into different, let me zoom in, sorry. So it's broken out into different sections. So you've got the financial trends schedules here, as well as revenue capacity, debt capacity. So all this kind of statistical information just adds value to the financial statements, makes it more transparent.
And do you do any analysis like benchmarking or value statements about these trends or ratios or whatever?
Not analysis in terms of that, but they do present a 10-year statement. So a lot of these schedules will be on a 10-year presentation. So here's, yeah, so you see here is 10-year trend. And then if you go to here again, 10-year trend on all these.
But you wouldn't, none of those statistics, you would say, oh, this ratio looks a little high, or this ratio is in the zone of normal, or anything like that.
We do that as a part of our audit procedure. It's not something that we present in the financial statements or in the statistical section is really the city's compiling the information, but yeah, there isn't that analysis. So what you'll see typically, there's the management discussion and analysis that we just covered in those schedules earlier. That's typically where you'll see it.
So is there anything in that discussion that you want to highlight about how the city's doing?
Well, those items I discussed earlier,
Okay.
mainly with the GASB 68 with the pension plan, that was a big one, that big change that if you were looking at it, you'd probably wonder why your pension liability or your liabilities overall dropped so much. So those types of things, yeah, I covered all the key items there.
Okay.
And so just for those who are new, so the kind of the layout of the ACFR, just so you're familiar with the presentation. So it starts out with the introductory section. Your transmitter. This is prepared. This is all prepared by the city, and then you get into our report. And so the way the financial statements work is you've got yourself these basic financial statements here, and you've got the government-wide financial statements, and you've got your fund financial statements. So the government-wide financial statements, which are the ones we covered earlier, they include your long-term assets and long-term liabilities. So you have capital assets, you have debts, you have all those pension liabilities, things of that sort. So in the funds, because there's a different focus in the funds, right? The funds are really meant to see how the city or the government agency is spending out its current resources, right? It's got its focus is on spending down resources as opposed to accumulating resources. So if you think about government-wide, you think of it kind of like as any other. For those who who are familiar with financial statements, like from a corporate level, right, a commercial client, they have a balance sheet where they'll have the full accrual, they'll have those long-term assets, those long-term liabilities, so you can really see what the financial position is like. In the funds, the idea is really, you issue debt, and the proceeds from the debt is a other funding source, right? It doesn't hit the balance sheet as a long-term debt, right? Because the idea is not to accumulate resources, but how did you spend the resources that were provided to you? And so that's how the city operates from its just day-to-day operations, is focusing mainly on the funds. So in the funds, let me back up one. So in the government-wide statements, the statement of net position, it's analogous to like a balance sheet. The statement of activities is analogous to like an income statement. So we covered those two statements earlier. In the fund financial statements, you've got the balance sheet, right? But you're not going to see long-term assets or long-term liabilities. Then you've got yourself the statement of revenues, expenditures, and changes in fund balance. So again, you can think of that like as an income statement, but there's going to be adjustments to those because it's what's known as modified accrual. So it's kind of like cash accrual, but then you still have your accruals, like you still have your receivables, you still have your payables. So those are accruals, but they're current liabilities and assets. And then because there's this difference between the statement of position and the balance sheet, we present a reconciliation to point out why do I see this on the statement of position, but I don't see it on the balance sheet. So this reconciliation will point out those long-term assets and the long-term liabilities. And then same for the statement of revenues, expenses, and changes in fund balance. We also present a reconciliation to show why does the statement of activities up here have certain things that our statement of revenues and expenditures does not have, or vice versa. And so this reconciliation kind of ties the two statements together. So really, you've got 4 statements and 2 reconciliations as part of these basic financial statements here. And because the city has those business type activities, the sewer fund, you'll see the proprietary funds here. And these are on full accrual, so there's no reconciliation. So the statement of net position is a full accrual. You'll see long-term assets, long-term liabilities here. You've got your statement of changes, is basically your income statement. And then your standard cash flow statements that you'll see for any kind of business type agency or entity. And then fiduciary funds, you've got a few of those that you've got a statement of net position. Did you want me to cover the fiduciary funds at all, or?
What do those refer to?
So
Pension plan, there is
Yeah.
the Creek MOU. We have an agreement with Berkeley and UC Berkeley to maintain creeks, and everyone puts money into it, and Albany holds the money. And I think it's just those two. Is there one more?
yeah, so you've got. Did you mention this one, the trails one?
Yeah, that's the Creek one. Coordinates Creek Fund.
So there's these three right here.
Also, I had an epiphany while he was talking. Paul, you break out the police and fire pension contributions into your expenses, correct?
What do you mean breakout? Like, what do you mean by that?
So she had asked what the difference between 2021 and 2022 was for why were there so many more expenses when we thought that, staffing was getting better. And if I remember correctly from going through the statements at one point, the pension contributions that are associated with the safety plans, you put some of those into, or you put the ones you can identify into the expenses on that worksheet, right?
Yeah, that is correct. Yeah, that's absolutely correct.
I think that's what the difference is the pension contributions for those plans year over year. I will confirm though.
Okay, so police and fire pension fund, does that refer to those two? Is that the closed funds? Which, okay, so that's just those, and the CalPERS funds are not included in these. Okay.
That's correct. Yeah. Okay. Okay, and then we get into the notes to the basic financial statement. So the notes to the basic financial statements basically provide kind of more analysis to the numbers that you see in here, and kind of the big ones that we cover. You're going to be your cash and investments, your receivables, your interfund activities. You've got your capital assets, which is a big part of it. You've got your debt. The pension and OPEB, those cover multiple pages. There's a lot of disclosures related to your pension plans and your OPEB plan. So you'll see that in there as well. And the debt section is pretty comprehensive. It does get into some details on the debt that the city's got. And then these are required supplementary information. So we looked at some of the schedules for the pension plan. So you've got the pension contributions and the change in that, as well as you've got similar ones related to the OPEB plan. And so because you've got the single employer plan here with the fire and police, you've got a set for those, and then you've got the CalPERS plan, the cost sharing plan. So you've got a set of schedules for that plan as well. So you've got two here for that, and so on. And the reporting standard requires that we report on the budget to actuals for the general fund and any major special revenue fund. So in this case, you guys only had the general fund to disclose. So there's a schedule on the budget to actuals, and then supplementary schedules. So what these supplementary schedules are in terms of financial reporting, as we saw earlier, you've got the general fund, which is a major fund, and then you have the storm sewer fund as the other one. And then everything else was collectively reported under a third column for the non-majors. And so these schedules are basically the same schedules, just broken out into the individual funds. So these have a lot of details for every single fund that the city has, but more or less same idea. These are going to be your governmental funds with the same schedules with multiple columns for each fund. So it's broken out under special revenue funds right here. And so we've got a set of schedules for those, the balance sheet and the statement of change, and then capital projects funds. And this again, the balance sheet and the statement of changes in fund balance, and then the debt service fund. Okay. So these are the categories of funds that the city currently has. And then we move on to the statistical section that we alluded to earlier. All right. Are there any questions about kind of the layout of the report? Or if any of these schedules you want me to get into more detail on, we can definitely take a look at those.
I just have a generic question. This is, how many years have you done this audit report for the city of Albany? This is your, how many year?
Going on 4.
4, okay. And so the table of contents and the layout of the report is fundamentally the same year over year, with the exception of mandated changes in reporting. It pretty much stays the same. Is that correct?
You know, I think in 2020, it was the first year that we went to a comprehensive presentation with the statistical information, the introductory section. Prior to that, it was just your standard audit report.
Right. Oh, there were some changes that happened internally in the city as well, and that may have contributed to that. So, okay, thank you. That's all.
Are you able to flip to the special revenue funds? I'm curious what.
Sure.
In there.
You mean these the detail with each of the funds, right? That's what you're asking?
Yeah.
Yeah. Oh, sure. Absolutely, I can do that.
I just said there's a lot of them. It's all
Yeah,
of
there's
your
a
taxes and some state taxes, your Alameda County Transportation Commission funds.
Is the sugar sweetened beverage?
No, that
item in
is
there?
general fund.
Okay, that goes in general funds. Okay,
Right.
that's why I was asking.
Yes.
okay.
So I
Did you
don't
want to?
No, I think Heather's overview helped there.
Okay.
I'm not sure we don't want to get too far into the detail on this unless you have a real specific question about it. Did you have a question?
Yeah, well, I have 3 questions. Is there a section of this report that's called like the executive summary, where there's a half page to a page of analysis? And what page is that on this report?
Yeah.
What's it
Sure.
called?
Yeah, it's kind of 2 sections, if I can reference you to it. So what the city has is it's going to be the transmittal letter, right? This allows the city to basically say what it wants to say in there, right? Sell itself, right? And then you've got the management discussion analysis. So a lot of this we help in the preparation, but one piece of it that the city contributes quite a bit to is going to be the factors bearing on the economic factors bearing on the city's future. So let me get you to that page. Yeah, so starting here, you'll see that there's further management analysis into what to look forward to. This is what we typically refer to as the forward-looking statement, and this is in the management discussion analysis.
So as part of this report, are there specific aspects that would be called warning signs for troubling aspects of the audit for the city and or positive strengths? So
yeah, so in terms of from a financial statement perspective, the city is in a healthy financial position. You've got a healthy fund balance, you've got a healthy net position. If you're referring to the audit results, over the years that the city's had we've had many exceptions when we audited the city, and we've issued findings. And over the last few years, with Heather really building the team she currently has, and we've kind of cut that down quite a bit. The city's made great improvements. They've taken our recommendations. Up to this year, it's not fully cleared, but we are still seeing a move in the right direction of getting where we need to be. And I was found to Heather that coming into fiscal year 23 with a nice clean close and a solid team now, because even the city's had some significant turnover in key employees, and that's really hurt. And it's hurt not just in the manpower, the resources, but the experience, right? It's that learning curve when you've got new people coming in and having to pick up where the last person left off. It can have its challenges, especially in a crucial time such as closing your year. So we still have those opportunities we're working through, but like I was starting to say, if everything goes smooth as according to plan, I don't see any reason why fiscal year 23 couldn't result in a clean audit.
Do you have a management recommendations section? I think I've seen that in the past. Is that something that you're ready to present today, or is that still in process?
The details of it is still in process, but I can tell you it's related to the closing, right? There's a lot of stuff that as we were going through our audits, things weren't tying out. And so we've discussed that with management and how to go about correcting that. But it really, a lot of it had to come down with the government-wide stuff. So your capital assets tracking, your debt service stuff. There was still some remaining negative cash balances and things of that sort. A big part of it has to do with the transition the city went through recently with its financial system, and the implementation didn't happen very smoothly, and it's kind of there's still some dwindling issues that Heather and her team are still working through. So, for example, with the receivables, initially accounts payable was the big one. Trying to clear old payables and things of that sort was a really big undertaking. Just the way the roll forward into the new system took place, and how that data was flowing through to through the ledger. And the same applies now with, like, for example, the receivables, there's certain functions that the city's still trying to understand. They're working with a consultant and your vendor themselves to see if they can figure out how to clear it and how to move forward so that you guys don't run into that issue again. And then just recently, Heather and I were talking about kind of the budget module that's in the system, trying to understand how the budget numbers roll forward from one year to the next, when you've got residual unspent balance on the budget, and how that impacts the subsequent budget. So those are just little things here and there that require a little bit of tweaking, a little bit more I guess education or understanding with the way the system's working, but they're making good progress.
Okay, I have one other question. There are two subcommittees in the Financial Advisory Committee. One is on revenue, how to increase the revenue to the city. And the other one is the unfunded pension liability or unfunded accrued liability. Can you point to anywhere in the audit where you would say the people who are in those committees could focus as to where the best information is that analyzes our position in terms of revenue and on unfunded pension liability?
Sure. Okay. So when it comes to the revenue, I think really when it comes to the revenue, I think internal reports that Heather and her team provide, management reports, staff reports, things of that sort, are probably your best tool, right? Because they have the detail, the live numbers that are currently at. But from a summary level, I would reference you to probably the MD&A, where we've got these summary schedules to show you these changes, right? But again, it is at a summary level, so you don't get to see the detail of what's causing or leading to that increase, right? So from here, you can see, whether it be charges for service or grants, but that's very generic term. You don't know which grants are making this up. So really, internal staff reports would be your best bet on analyzing whether or not these revenue sources are coming through. And even from the budget stuff, again, but staff reports will help, right? Because Heather and her team will know what new revenues are down the pipeline, when new revenue sources, they'll account for that in the budget. Whether or not you see the actuals hitting your financials yet, at least from a budget perspective, Heather and her team will know and adjust the budget accordingly based on your financial reporting needs. So is that cover you on the revenue?
And this is where in my quarterly updates, there's that summary page up top, and it has the audit overview. And that way you can tie back, as I drill down into the department overview and then the detail, those categories can tie back to the audit. So that if you have questions of, as you're looking at the detail, where is, the property transfer tax, or where are those other things, it'll flow through on those budget to actual reports that I give.
Okay. So when it comes to the pension, so it's a little bit more difficult to see how your contributions and whatnot ultimately end up in your liabilities, because it's a pooled plan. It doesn't necessarily work out that way. So different agencies have done different things. But there is a whole disclosure on the cost sharing plan here. And what you'll see in here is the contributions, right? You'll see this. You'll also see your share, your proportionate share of the pool. And this might help as well, as you can see, what proportionately where the city stands. And then in addition to that, you can make additional contributions. A lot of like smaller agencies, I haven't seen too many cities doing this, but like a lot of our special districts that have a healthy reserve, they'll pay off some of their pension liability. I don't see that being realistic for the city at this point, but you can reach out to PERS and make additional payments. There are pension trusts that can be set up. The thing with the pension trust, depending on which trust you set up, but the ones we're familiar with, they don't offset your liability. What it basically does is it's a reclassification of your cash. So you've got yourself your unrestricted cash that you just use for normal day-to-day operations, and then you set up this trust, your pension trust, and you move money to the side into that trust, and it just becomes restricted just for the purpose of funding the pension or paying the pension as you go. So, but it, like I said, it doesn't offset your liability.
Can I ask a quick question about this schedule that you're showing here, this under miscellaneous? So is this saying that as of June 21, the city's net liabilities were 0.25% of CalPERS's net liabilities for miscellaneous plans?
Yes, that is correct. Yeah.
And then it jumped to quite a bit.
Yeah, that's correct.
What would cause, I mean, given that these are like long, mature plans, like what would cause one city within CalPERS to increase so much in 1 year.
Yeah. Well, this isn't this. Keep in mind, this is less than 1%. This is a 0.087%. So it's very little. But the way they calculate this is it comes in. There's three pieces or two, I guess. So there's the total pension liability. So the city, the actuary will do a calculation of the city's proportionate share of the total pension liability. And then there are the plan assets. The plan assets are going to be the contributions that have been made into the plan. And so there's the city's proportionate share of this plan assets, or they call it fiduciary net position, right? And so between your total pension liability less your fiduciary net position, you get your net pension liability. So those calculations are going to lead to this. And so to answer your question, it could be any one of those factors. It could be your share of the total liability or your share of the plan assets.
Are there CalPERS documents that we could look at that would help us understand that?
Yeah. So I can share that with Heather. It's a very long report because there are many agencies that participate in the plan. But yes, there are actuaries that they have a full chart of every single member in the plan and what their proportionate share of those categories that I described. And you'll see it, and it'll add up. It'll total at the bottom. You see it's 100%. And so that's where these numbers come from.
Okay, thanks.
So one thing I can, I know it wasn't discussed as far as the pension, but if I can allude you to the OPEB, this might clarify things a little bit more, because cost sharing plans can be kind of complicated, right? It's not just the city. You've got to account for so many different agencies in the same pool and how it impacts them. Your OPEB plan, on the other hand, is a closed plan, right? It's just the city, right? And so this is kind of what I was describing earlier, right? You've got yourself your total liability, you've got yourself your fiduciary net position with the assets. In this case, the city doesn't have a OPEB trust, but if it did, you would see numbers in here, and you would see then the overall OPEB liability decreased. Now, the difference between the pension trust, like I was describing earlier, that it doesn't offset your liability. OPEB, on the other hand, because it is a single employer plan, any money you put into an irrevocable trust does offset your liability. You will see numbers here, and so your net OPEB liability will be decreased. So these assets do decrease your liability when it comes to a single employer OPEB plan. It just doesn't work that way in a cost sharing plan. Did that, I hope that helped to answer the question about how to monitor if your pension funding efforts are
Definitely.
having an impact. Okay.
It did. I had a couple other questions just to sort of finish this off. What about audit adjusting entries? So can you comment on how many adjusting entries did you have this year, and did that go up or down, as a trend from the previous years?
We had 15 adjustments this year, which it's a little bit more than we'd like, but if you think about it from a kind of a qualitative perspective, we do see improvement in the city, and we do understand what's causing it. So in terms of our concern that things aren't getting better, we don't have that concern. To a certain extent, I guess you could measure improvement based on number of journal entries, because as things get better, the idea is there's going to be less adjustments that auditors need to make, right? Yeah, that is true. But the reasons for those, because we are aware of the turnover, and the idea is that that's not a permanent thing. It's not that the city will perpetually have turnover. We've discussed, cross training and things of that sort with Heather and her team, just, to mitigate some of those challenges, I guess. And I think they have started doing that. There's a lot of that cross training. So, but as for those who have been around, the city did lose very key people in their department. More high level accountants. So that has a more significant impact than other members of the team.
And I do have to commend Cassie. She has done a lot of work in putting together procedures for internal use. Most of that has been front end with revenues and expenses. And now we're starting to have the breathing room to focus on the back end, the accounting entries and all of that to make sure that that starts to get tied up.
That's what you want to see, right? Is moving in the right direction. Then the other thing that I don't think we covered yet was the audit opinion.
Yeah, so the audit opinion, we had an unmodified opinion, but we did have the finding in terms of the financial close. So with an unmodified opinion, it's not qualified. Like what a qualified opinion would be is that there was anything that we couldn't say that we could rely on them. So to give you an analogy, prior to us, your prior auditors actually disclaimed to give an opinion. Like they were saying the numbers were so wrong, or the support that was provided during the audit was so lacking and deficient in some way that they couldn't even issue an opinion as to whether or not the financial statements were fairly presented. So over the years, we've had certain areas where we're saying, okay, the financial statement presented except for this or except for that. So that's where you would see a qualified opinion. So we issued an unmodified opinion with a finding for the financial closing, which we discussed earlier.
So is that an extra sentence or is it a paragraph? Does that actually appear in the opinion itself?
Yeah, so it does. And so this is something Heather and I were still fine tuning the language and the city's response to the findings. So what you'll see is in the opinion itself, it's under the deficiency. So you've got yourself internal controls deficient. Sorry, can you see this?
No,
No.
you're
Okay.
sharing a difference.
All right. Give me 1 second there. Okay, so you'll see it under the as a significant deficiency in the internal controls, and this is under the government auditing standards opinion. This is over the internal controls. So in the independent auditors report that at the beginning of the ACFR, there's no mention of it there because that's the financial statements were fairly presented. It's more the internal controls and the process that were noting deficiencies.
We have included these as in all of our audits that we've posted to the website. They're at the very end of the PDF. And I will note that I've looked at other cities and they do not provide these.
I'm glad that it's in there because it's really important information and it's transparency and it means that you're leveling with us about what challenges you're having right now. So thank you.
Yeah, and you'll see, if you look at the prior years, over the years, you'll see that they have, they are going down substantially. Yeah.
Can you just go over that one section there with the significant deficiency and can we just see what that actually says?
Sure. So I'll keep in mind this, like I was saying, we're still hashing through this with Heather and her team on the response, but it talks about the financial reporting and recording the long-term liabilities as well as the capital assets that we talked about earlier, and then it covers kind of how that impacts the financial statements overall, what was causing it, and then what we recommend to the city, and then it goes into what the city response is, how they're going to react to our finding, and if they agree with it, what measures will be taken to address the issues.
So Heather, is that with Cassie going forward and writing up the procedures for the reconciliation of all these various subsidiary ledgers to the general ledger? Those are the types of things that you guys are doing to try to address that?
Yeah, we hired an accountant position probably about a year ago to address some of this. And he was pretty new when the last audit or when this audit was coming. And so a lot of this was on me, and I have other things to do. So it is something that we are actively working on. And I've used the auditor's previous AJEs, adjusting entries, to make some of my year-end close adjustments this year. So, we're using those things, putting them all in one place so that, we have that documentation to go back to. So, but the accountant position, it's been pulled in a couple of directions because we lost a payroll person, and we're but ideally what we're moving towards, and we've gotten a lot better, is to do a full-on month end close every month. We're up to date on like all our banking reconciliations and all of those kind of things, but to actually go through and look and see, okay, what journal entries are outstanding. And we had some issues with accounts receivable. We lost someone, and we realized that there was little stuff all over the place. And so we were trying to do a lot of reconciliation at the end of the year last year, and we were kind of playing catch up. So he is going to be actually going in at the end of the month and saying, okay, everything's been posted. We know, where it is, it reconciles. And so that we're working on it.
Okay, so just to restate what you're trying to do going forward is tying out and reconciling all of these accounts on a monthly basis as opposed to just once at year end, which obviously that's a good control.
And
so you don't get surprised.
like Paul said, there are still, especially the negative cash balances, there are still some of these things that are just left over from the software transition that are less than $50,000. And I honestly was like, this is not my biggest fire right now. So I've been focusing on making sure the money comes in and goes out correctly. And we have that down now. So, I'm balancing between fixing some of these loose ends and setting up, different policies and making sure that going forward, the city is set up for success. So there's a balance between, my time on what is the most important thing at the moment.
When you say there's a negative cash position, you don't really mean it's negative. Are you referring to when you did the software transition, something didn't zero out?
Like 3 years to figure out what negative cash meant. I was like, that's not a thing. You can't have that. But basically what it is, and Paul, correct me if I'm wrong, and it'll be 5 years that I don't understand this, but what it basically is the city works on fund accounting basis. So you were talking about what special revenues are. and we keep them in different funds. So they're basically each their own little company that have, revenues and expenses of their own, and then they loan each other money, and we have to keep track of all of that. And negative cash happens when they're basically borrowing between each other, and we track that in some way. And so those negative cash values basically track when one fund has overspent and is basically a loan from the general fund. And it will eventually, once the revenue, you see this mostly with grant funds where we have to pay out ahead of time, and then it's a reimbursement grant. And then, we'll make the transfer back to the general fund, reduce the negative cash, and get it all done when we have the revenue. Did I do okay?
Yeah, that was actually a good explanation. To just give a little history for those who weren't around, but several years ago, like cash was just all over the place. Like the city had to hire in a CPA consultant to reconcile cash for every single fund and go back, in the ledger's history, many years to see, what the true cash balance was. And so since then, they got to a good baseline. And so then you pick up what Heather described in terms of just the day-to-day stuff, right? So the complicated piece is that the city has pooled cash. So all the funds, that the cash and investments that the city has is treated collectively, right? And then as invoices are getting paid, as revenues are getting recorded, there's a process for allocating that to the correct fund. And so once revenue comes in, okay, now you've got revenue, now you've got cash. This cash goes to this fund. You've paid an invoice. Okay, now you've got the expenditure and you've got a reduction in cash. That needs to be allocated to this fund, right? And then there's the short-term borrowing that Heather was describing, if in terms of reimbursement grants, say that it's a timing difference, right? And so all of that happens just on a daily basis. And then at the end of each closing period, financial reporting period, the city would then analyze, okay, do we have these balances correct, right? Has every fund repaid, typically it's the general fund, repaid the appropriate fund, for any of these short-term borrowings? Or do we need to record a payable in this fund and receivable in that fund, right? Or do we just move the money now and record the operating transfer? So those are all, it's quite involved when it comes to pooled cash. And so hopefully that clarifies some of the negative cash concepts.
It does for me. I think it's sort of akin to a net fund balance, really, right? Because the cash is kept in one bucket.
Yeah, I mean, we only have one bank account, we don't have 60, and we have approximately 60 funds that we actively use. And Cassie can confirm that I get real intense about pooled cash entries now.
Okay, I just want to do a time check. It's 5:45. I know we had talked about the possibility of needing to end this meeting at 6 or whatever, but we do have a couple more agenda items that we have to get through. So I'm wondering if it's appropriate at this point to close this discussion so we can move to the next agenda.
Do we have any public on virtually? Okay, no. So we don't have any public comment.
There's no public comment. Okay. Was there, Paul, was there anything else that you felt that you needed to convey to us with respect to the audit?
No, but I did want to apologize one more time. And I did not mean to disrespect the committee. Just unfortunately, it was my bad. So I wanted to apologize one more time.
Okay, thanks. Okay, so I think we don't have any more on 5.1. There's no public comment. So if there's not any more comment by any of the committee, then I think we should move to the next matter on the agenda. Thanks, Paul.
Thank you.
Right, so now we're moving on to section 6 on the agenda. So item 6.1 is the sugar sweetened beverage tax, and Heather has a presentation to give on that.
Yeah, I was going to ask Cassie to pull up the staff report that I presented or I put together. I will start out, this has been an interesting tax. It was the first tax that Albany passed that had a voter recommendation in it. However, it is general fund money. So it goes into the general fund. It was passed as a general tax with only a majority vote, and it is it's kept in the general fund. Previously, it had been presented as if it was a special fund. And so it appeared as if there was a balance. That balance is just general fund. It's part of our general fund balance. It always has been. It's just been, it's presented in a different way. So I've been really trying to hit that home that this is general fund money. It is part of the general fund. The council is required to have a study session every year by the law. And at the time, the Financial Advisory Committee was not created yet. So the committees that are noted in the law that are required to put together recommendations are the Parks and Recreation Commission, the Social and Economic Justice Commission, the Traffic and Safety Commission, and the school district. The city also sends letters to the dentists and chiropractors. Oh, do we send them to doctors too? And so medical professionals that could, in some way give an opinion on how, sugar sweetened beverages affect the population. So last meeting, we had discussed whether we wanted to, the Financial Advisory Committee wanted to put together a recommendation to council to provide. I can either include that in the staff report that goes to council, or you guys can create a subcommittee. I mean, it's really up to you. My information that I provided in the staff report, it lists how much tax we've collected since the inception of the start of collecting the tax in 2017 up through December. And then we also have a website that we update that talks about the different projects that this tax has funded. And this information is a little bit more up to date. The information on the website is, I think, from last year, but these are the expenditures that have happened so far. And then I also included as an attachment, which I did not send to Cassie, as an attachment, the spending plan from last year. Last year, council had indicated that they wanted to kind of use some of what is the balance of the sugar sweetened beverage tax to put in some, it went to bike lockers down at the bulb. And then I think there was, the bike path that is going along with the low-income housing project. And so those are a little bit more, those will end up costing more than the anticipated revenue, in addition to the other smaller programs that they approved. So it would basically draw off of general fund balance to make up for that. And with that said, I can answer questions, or you guys can decide what you would like to do.
Comment, Francesca?
I literally watched our last meeting today on YouTube. And the number for the crossing guard. So I'm just trying to understand what this $426,000 represents over what period of time?
It's what has been associated with sugar sweetened beverage taxes since it was started in 2017. So that's the amount from 2017.
Cumulative.
It's a cumulative, okay.
Yes, it's cumulative.
So all of these numbers are cumulative.
Correct. Some of them have been, like the water bottle filling stations, that was kind of like a one go. And we aren't doing that anymore, so you won't see any more of that. But the free fitness classes and cooking classes, I don't think we're doing those. Those stopped because of COVID. But the Healthy Me Music and Movement, that person goes into the Albany schools and she does her program. And so that is funded through this and that's continuing, assuming they continue to fund it this year. The miscellaneous contributions are, last year, the council approved a donation to the walk and roll to the bulb. And then it ended up also going to, there was an event in a park. Yeah, something like that.
Okay, so wait. So that means we've spent 25, around $500,000 since 2017, and we took in 1,500,000. So we've put around $1 million into the reserve fund. Does that,
Correct.
I did quick math.
Yeah, when I did it, it was around $900,000. So
Okay.
we're on the same path.
And you're expecting says 162 for half a year. So do you think is this one of those things that is a straight, a steady stream, or is there a Christmassy thing?
It's been consistently, year over year, it's been consistently bringing in around $260,000. One year it was 275,000, one year it was 250,000. So year over year, it's been bringing in $260,000. It is not going down. It is.
Right, but the 162 for half a year would be 325. So
there's.
You're not expecting that.
No.
So something, but so, all right. And then from our last meeting, there was a budget for 198,000 for crossing guards.
That contract has been increasing year over year. The cost of that contract has been increasing.
Right. So last year it was 198. This year it's going to be more. How do we put money? So it sounds like that leaves around $50,000 if we stick with that. And at the last meeting, I mentioned that I questioned why the city was paying for that instead of the school district. And when I watched it again on YouTube today, I think I recalled that I may have forgotten that a portion of that was being funded by UC. Does that ring a bell? You don't know.
This was done, the crossing guard transition was done before I got here, and we've consistently just been paying the bill that the contractor has sent us.
So there is who contracts these services? They are
management services. Yeah.
who?
All
The
city management services.
Yeah, the company is called All City Management Services. We contract with them to provide crossing guard services.
So the fiscal year 22-23 expenditure plan, which is attachment 2 to item 6-1, has all of these things itemized. It's 346,308. So that's more than we would expect to bring in this fiscal year. If we're thinking that's going to be around 260, 270. So that's where it brings in this idea of people are kind of thinking of this as a special fund or some sort of a reserve type fund and looking to kind of spend some of that unspent fund balance, which is not really a fund balance. And so that's kind of, I think that's sort of the decision point we find ourselves at is how special or reserve, how much of a reserve do we want to treat this as? Because it's not a reserve fund, it's part of the general fund.
And I will say that the city attorney has expressed concern about council treating it as a special revenue fund in the past. I've kind of skirted around that with the update to the utility users taxes, where we created a capital action plan reserve fund. And it's just general fund money. The council can put whatever it wants in, they can take whatever it wants out and reallocate it. It is simply a reserve fund, but the idea is to fund it if we have a surplus with that 1/3 of the increase in the utility users tax. So I'm not necessarily treating it as a special fund where, funding a reserve fund. We don't have that set up for sugar sweetened beverage tax. You start to get into an interesting area because special taxes require a 2/3 vote and general fund taxes only require a majority vote. So
I'm kind of confused. We have a total here of 346, but a revenue stream of
it's
80,000. So it's a negative.
it's simply a general fund cost. The council has appropriated from the general fund to fund these programs.
Judy, did you have?
Okay.
Yeah, I guess I just want to reflect a little bit on this. Having sat on one of the commissions that reviewed it since this tax was initiated, I've been part of that process. And I have to say it's a bit onerous and it creates these false expectations that this small amount of money, quite frankly, is under the control or we get to decide what we're going to do with this money. And it's almost a false impression in some ways. Having sat on some of the commissions who actually are participating in this. Unfortunately, the ordinance is what it is, and we're kind of stuck with the language of it. So we do have to review it. But I think it's important for the public to understand that there's a lot of ways to express the values of the community beyond the sugar sweetened beverage tax. There's a whole lot of participation in this commission, the work of the budget review that's important. And to just sort of take this with a grain of salt or maybe a grain of sugar in this case, but to look at this as something that's not as end all and be all as it has been in some times in the past. So those are my comments.
Will say I did ask that the budget presentation not happen at the same time as this presentation this year, because when we presented the past biennial budget, we did the study sessions together and we were presenting a deficit budget of, $1.8 million. And we spent the entire study session talking about this $250,000. So I did ask, and we're separating them this year because I want to make sure that we're focusing on one thing at a time.
I guess my thought on this also is that we are presenting a deficit budget of 1.8 or 1.9 million or something like that. And it just seems inappropriate to me to at this point be going back and saying, well, we're going to spend $346,000 more this year than this brought in. It's going to bring in 270 or whatever. So there's probably, that means we're contributing to the city's deficit by furthering the spending plan. And I know there will be folks on the other side that say, well, the city has collected $900,000 more than it ever spent out. But I mean, you still can't get around the fact that we're going to present a deficit budget, which I really don't think we should be doing. We can't do that sustainably for a long term. And so adding to it by approving all of these things or recommending them, I guess I have a hard time with that. And I do understand where this ordinance is coming from and the value of doing these things for the community. But I think it also has to just be balanced against the economic facts of our situation right now, which is a deficit budget. What do you
I
guys-
agree. I'll just say I agree with that. And I would add to it also that the city's net position is negative. So to the fact that in the past, maybe more money has been collected than spent, but there's also no getting around the fact that the city in aggregate is in deficit. So
So
I mean, unless you're going to sell all the buildings, right? I mean,
which would result in a tidy profit.
right. But I mean, it really is in deficit when you look at, things excluding buildings and capital assets and things like that.
So how many sessions are there per year to study the expenditure of $250,000?
There's one, it's required by the ordinance that was passed, but it just says that the council has to have has a study session. It does say in conjunction with the budget, but we're
But we're having one.
But I'd like to just add that each work plan for the
That's
commissions includes an item for this, so it's not
Yeah.
simply one time.
So it's, I'm all over the place, Parks and Recreation, Social and Economic Justice, Traffic and Safety. Now you guys, the council, and then like the school district has to do it and they come to the council meeting and, that was another thing that they passed. They wanted to, the school district was doing an Albany swims. They were going to use some of this to give scholarships for kids to take swimming lessons. And, different interest groups come in to the council as well.
So that's my question was how many study sessions are done? And I think you counted 6 or 7. And so we have 6 or 7 groups spending time at their meetings to analyze how to spend. And really, it's 13, 28, around 100,000, because it seems like the crossing guard program is just part of the budget. So ours is a financial advisory committee, but time is money. And the biggest advice that we could give, I think, is to don't have any of these study plans and just when you have a study session for the council, which they're required to do, then everybody brings their solicitation for their program at that period of time. And then it's done. But I don't really want to see this again. I don't know why the school committee wants to be spending their extraordinarily valuable time figuring out how to do this, and staff time. Not just our time, staff time. I mean, right? So how many, there's like 7?
So committees just take it up as an agenda item. The council actually has to have a special meeting, like they meet before the council meeting, where they have a 1.5 to 2 hour meeting to specifically talk about this. It's not just part of their regular meeting.
But it's a public meeting.
Yes, and I think that's why they have to have it as an agenda item for all those other committees, is because they're required to, consider it and put forth a recommendation, and they can't do it outside of a public meeting. So
I guess the task before us is to give our recommendation on this, because that's what the ordinance says. These committees provide their recommendation. So we need to consider what we would recommend. Kyle, did you have something to say about that?
Yeah, I just wanted to clarify. So we have fiscal year 2022 to 2023 in front of us, but is there a study session to be held in 2023 about the following years?
right. So we're having our meeting before the council's study session. So if you have recommendations, you can give them to the council when they make their 2023-24 spending plan, which will be incorporated into the biennial budget. Their study session is on April 17th.
And what we see here is kind of moot because
It's
this is already in
Right.
this year's budget.
that was already approved. It's an example of what happens at the study session. So you can see, what we're currently working with.
Sorry, go ahead.
I mean, my recommendation would be we more realistically peg what's actually in here to what this tax is actually accruing.
Exactly. That's what I'm thinking. If we know we're going to collect 260 to 270, then budget 260 to 270 and not 350. It's pretty simple.
Yeah, I guess I feel like part of what we're doing is trying to make sure that the city's situation with pensions and liabilities in general is top of mind, and budgeting is top of, so I guess I would even say until the city's in a positive net position without capital assets and stuff like that. I don't know to define it better, but maybe that it would only be 50%. That 50% would actually go to the general fund to pay for pensions and things like that, or some percentage share like that. I don't know that I would even want 100% of it. But I would recommend 100% of it get expended.
I see where you're going with that, Mark, but I also feel like the ordinance is written to say that this tax should be used to spend towards things that promote healthy lifestyles and things like that. And so it doesn't say in the ordinance, you should use some of it to pay down your deficit. So I guess I thought about this a lot because I like that idea of using some of these general funds to address the deficit. But my feeling is that in reading the ordinance, if you're going to try to true to what was set out there, that we should spend the money that's collected for these types of programs, but I don't think we should spend more than the money that's collected.
Excuse me, I think you've mischaracterized the ordinance. It's just a suggestion of where it could go.
Right.
And our job is to give them advice about what's proper in our minds. And I think I like what Mark said, where it's like you spend 50,000, 50% of it should go towards, what did you say, Mark? For the
I guess you could just say the goals, outlined in the ordinance, but then 50% just goes into the general fund. Or it all goes in the general fund, but the expenditures are only 50%.
Right. But if they want to, yeah, so that's our advice is that I would say spend 50% to pay down the unfunded pension liability and then 50% to whatever else you want to do. Because that would be my advice from the Financial Advisory Committee, because it's general fund money that has a suggestion. And you said something pretty profound today when you said the city attorney has a problem with perpetuating language that says we should be spending this that way. What did you say? Why don't you say it again?
There is a concern about treating it as if it is a special fund, and holding aside that money automatically without some other action of the council. But that is something that the city attorney would need to answer. She has said that in a public meeting, so I am not upset to say that, but I'm not worried to say that. But if you wanted more detail on why she thinks that, we would need to reach out to her.
I think it's kind of clear. I mean, I understand don't we all understand what the difference between when you have a 50% plus one tax and when you have a 2/3 tax that's earmarked for something particular. So I think we should make a recommendation It's very specific about the use of the expenditure.
I wonder if we could recommend to the council that they create an ordinance, as clarifying ordinance for the sugar sweetened beverage ordinance that would advise the community that the city is always interested in public health and in programs that promote health and safety, and that the revenues in the general fund are almost unanimously spent on that kind of a program, and thereby take some of the edge out of this sense that it's a special fund. I have no idea if this is a legal thing you can do with write an ordinance clarifying another ordinance, but
So
without going to the ballot, and that would be a mistake probably, because this wouldn't be able to be passed again, I suppose. But
yeah, because there's a couple of things there. Because it is a voter passed measure, it would have to go back to the voters as the tax. This tax was grandfathered in because Albany got it right before the state put a moratorium on sugar sweetened beverage taxes. So we cannot touch it, or it goes away.
It's just, there's this section in the ordinance, so it's 4-13.10, annual study session for public input. I just want to read it because I think it's germane to the conversation here. The city council shall conduct an annual special study session in conjunction with the city's budget process for the purpose of receiving input and recommendations regarding the expenditure of proceeds from the tax created by this chapter. Prior to the special study session, the city council shall solicit recommendations from the city's Parks and Recreation Commission, Social and Economic Justice Commission, and Traffic and Safety Commission, as well as a designated representative of the Albany Unified School District regarding the use of tax proceeds. Additionally, the city shall solicit recommendations from individuals with specialized expertise in areas such as public health issues and programs relating to diabetes, obesity, and sugary drink consumption, and any other individuals or organizations as deemed appropriate by the city council. So I guess that's us, because we're not mentioned specifically.
we didn't exist.
We didn't exist at this point in time. It's, I guess legally, it's a general fund, but this paragraph is strongly leading the public in the direction that these funds are to be used for this specific purpose. So maybe, yeah. I don't know.
I agree. I was reading the same thing. If I was voting on this and I saw this language, I would think or be led to believe that the money would be used as such, or at least most of the money. So, I mean, my recommendation to council would be, one, in future years, one, you can't act like you're able to spend savings from previous years going forward, especially if you're running a budget deficit, but match up the expenditures to the expected revenues that we're collecting. Consider the language under which this was passed, but we could also suggest that you are running a deficit. This is part of the general fund, and if you don't have additional recurring expenditures, don't put new one-time or new recurring expenditures in going forward. That is going to continue to run up the deficit, essentially.
Yeah, I think there's a real risk that the crossing guard program alone could consume most of this tax in a short amount of time. Or more. And then there's no money left over for anything else. And so then we've created a situation where we're just generating additional deficit to the general fund. So I guess I wouldn't be in favor of saying 50% of this tax revenue should be used for, paying down any debts of the general fund. But I also don't think it should go above the anticipated revenue. I'd be in favor of maybe saying there should be some sort of a holdback, maybe 10% or something, just to make sure that we're not exceeding the revenues. But I don't know, do you feel like that puts us in this legal, no man's land that the city attorney is talking about?
So, I mean, again, it's general fund money, so you can do whatever you want with it. The issue is when you start to reserve it and treat it as if it is. So if you are just suggesting, take the proceeds of like this tax and apply it to these programs, you're just asking the government to spend their money in a certain way. That's fine. So no, I think you're fine saying that if that's what you choose to do.
So I think we have some disagreement amongst ourselves about how much of this should go towards the health-related projects that were listed out there and how much of it should go towards the general fund.
I'm trying to figure out a way to make this really simple. And I like the idea that you don't spend more than you take in. So when it comes to, and that's that. I don't think we need to be talking about where it goes or how it goes or 50%, like I was talking before, just counsel regarding this beverage tax. Do not spend more than you take in, especially in any year where there is a projected deficit.
Yes.
Yes.
I second that notion,
Okay, so
especially if you're attributing expenditures to this tax. They aren't really attributed to that tax anymore. They're just coming out of the general fund.
Yeah.
So they're unpaid.
Right. So,
But I think that's a suitable recommendation from my perspective, is to say, don't spend more than you anticipate taking in, and you can't dip into your previous savings.
And if the community recommendations and the commissions made priorities but didn't assign dollar allocations or didn't project budgets, it simply recommended these are our priorities, then I think it becomes a much more manageable and operationally safe way to handle the budget without spending more than we have. So if we prioritize, but we don't commit to a single dollar amount or a specific dollar amount, I think we're doing okay.
You mean for specific programs under this? Is that what you're talking about?
Yeah, exactly. So,
I-
so school crossing guards is the a priority and, you know,
I feel like the priorities of who gets funding under this, the crossing guard seems to be priority number one. But then there are a number of other programs that are listed, and I don't really feel like we're in the best position to comment on that stuff. I think we should just say, spend what you take in and nothing more, and then leave it to the other commissions to recommend specifically who gets what's left. Because if you're spending 200,000 or more on crossing guards, there's not a lot left for the other programs. So
I'd like to make a motion that we recommend to the city council that when it comes to expenditures for the beverage tax, that they allocate no more than what is projected to come in. And that's kind of simple, and that especially in this year where there's a projected budget deficit, that's like financial advisory committee recommendation.
Yeah, and just to add on to that,
Well, first of all, that's a motion. So do we? What's the next process? Do
I
we
think
second it?
I think what we do is second it, and then we can have a friendly amendment. Is that how we
Yeah.
approach that?
so I'd like to ask if you just say the first sentence that you said, because I think you had it in one sentence. And I think that, yeah, I don't know if you can do
Oh,
that.
gosh.
Do you want me to say what I wrote down?
Yeah.
Okay. I said, council recommendation to allocate no more than what is projected to come in, especially in a year that there is a projected budget deficit.
Is that fair?
Yeah.
I'll second that.
Kyle, did you have a friendly amendment to this?
Yeah, the only amendment I'd make is they should not consider previous years' surpluses as additional expenditures to use in future years, because that money could be used to pay down broader city deficits.
So if I understand what you're talking about is that the extra monies, they don't exist. They're just part of the general fund.
Exactly.
Right. Okay.
Maybe it's just a clarification. A clarifying sentence that
Yeah.
something to the effect of, this is general fund revenue. There is no such thing as a fund balance, and therefore the notion that there is an excess fund balance remaining that is available to be spent is not correct.
Perfect.
I second that. Friendly amendment.
Okay. I think I can do this. All right. Committee member Bowman,
Yes.
committee member Carr,
Yes.
chair Trainer,
Yes.
committee member Papalia,
Yes.
and vice chair Priven.
Yep.
Okay, motion passes.
Okay. All right, very good. So I need to get,
Apparently, we do have an attendee.
oh,
Do we
we
need
have
to
public comment on this matter?
No hands.
Okay, so there's no public comment on 6-1. So let's move on to 6-2, the 2023 work plan. So we're supposed to finalize our proposed 2023 work plan today. And there is an attachment to the agenda, which is essentially the existing work plan. And we need to decide if we want to keep everything that's on the existing work plan, if anything should be struck, if there's anything to be added. So that is an attachment. 6-2. Maybe, could you put that up on the screen?
While that's coming up, I just wanted to share with the other members of the commission that I did listen to the strategic planning sessions that the council had a special meeting for a couple weeks ago. And I was specifically listening for any guidance that might come. This was a preliminary meeting and they haven't finalized any of their recommendations yet for their strategic plan. But as near as I could tell, there wasn't anything that would impact our work plan. So we would be safe in going ahead based on what I heard of that strategic planning session with a reiteration of what we're already done.
Okay, thank you for that. Waiting for that to come up on the screen. There it is. So the meat of it starts on page 2, I think. The first page is sort of the background. Here we go. So the 2019-21 work plan outcomes, we did write a report on that. We haven't had the opportunity to present that to council, but I think that's in the works that we'll be able to talk to them possibly at the April 17th meeting, did you say?
Yes, I am putting that on the agenda.
Okay, so I think the original plan, so about the work plan outcome from the last work plan was that perhaps 2 of us would go. I could represent the committee on the general matters and the pension matters. And then there's also the revenue work, the revenue subcommittee work that we did. So I thought it would be good if we could have one person from the revenue subcommittee to talk about that work. So April 17th, Monday.
I think I can do that.
Could you do it? Okay.
I'll do it quickly.
Okay. All right. So great. So then we've got that covered. And then in terms of the recurring, okay, so there are the regular reports. There are the big 3, budget versus actual reports, report on the audited financial statements, and the pension funding overview. We've listed the pension funding overview as desired, but I would say that should be required probably, given all the discussion that we've had and my general sense that that's a big looming item for the city that we should move that to required because that would signal that it's, you know, it's an important item.
I agree with that.
So pension funding overview moves to required instead of desired. And then on the recurring action items, have you all had a chance to look this over, and does anybody have opinions about anything that they think should be struck or should be added?
Well, that last bullet on the first maintain sound, the last bullet there, should that then be required instead of desired?
Okay, that is the first bullet point, maintain sound and increase transparent management. That one?
Yeah, you're highlighting the right, what I'm talking about. I guess since that's the pension and OPEB thing, should that be
Oh, that,
required?
yes, that should be required. Yes. I think that should move to required. There's a bullet point that was at the very end, which never totally, I don't think we were able to really do this. It's on the bottom of page 2. The FAC will appoint a committee member to attend California League of Cities meetings to gather information about financial challenges and successes of other municipalities within the state. And I think we had a hard time with this because that's actually a paid activity that we don't.
I think we can strike that. That was something I put in and ultimately used some of the resources of the website for the California League of Cities, which was educational to me. But I don't know that we really need to send anybody to that. I think we could strike that easily.
I think the problem is we would have to pay to send someone.
I believe that we're already a member, and I'm not sure how many participants get to go. I think the city already pays the fee, but
In our meeting last month, discussed this. And thought that Peggy McQuaid, who was then on the council, was the representative to this.
I know that she oftentimes watched the committee meetings, but I don't think that there is a like formal connection.
Okay. Okay, well, if there's no objection, I would recommend that maybe we remove that one and we just keep that, you know, in our hip pocket as a good source of education resource for benchmarking, particularly against other cities.
One suggestion on something that we might add under the one-time action items was the discussion that we had last time and formed a subcommittee with Councilmember Priven and I about developing KPIs for the council.
Yeah, I agree with that. That was actually something that I want to put forth as a future agenda item to see if we can get it onto an upcoming soon agenda. And I think that would be something that would be really helpful to this committee and probably also to the council to just have sort of highlights of, you know, dashboard of metrics. So we could add that as a one-time action item, which I know that you and Mark have been working on that. So we probably can, you know, knock that one out in another couple of months, if not sooner. So that would get added as one-time action item. There's at the very bottom, there's one called one-time action items. So it would just sort of be a one-off. There was the public comment today about the exploring that public bank that's coming up. I don't know if that's something that rises to the level of something that goes on the work plan. Does anybody have thoughts or opinions on that? I haven't really had any time to research that. I didn't know of it before.
Yeah, I think the safest place to put it at this point, barring further information than what we've got, is just potential future work plan items. I mean, that captures it, but it doesn't commit us to any recommendations to council with regard to that.
Then we could do research before our next meeting and determine if we want to advance that, or not advance that, but discuss it at another meeting.
So there was, I missed it, but that is there. She sent Margie Marks. Sent the attachment, the 50-page attachment. So,
There was a link at the bottom
okay,
to a viability study, and I think that was the attachment.
okay. So if you wanted to look into that. And I was thinking that we'd like that information. Revenue, so. Suppose that by doing this, it would somehow bring added revenue. You don't think it will? Just causing more staff time.
We can't talk about it, but Kim did indicate that we should talk about banking in general next as a future agenda item with, the fall of the Silicon Valley Bank and all of that. So I might be able to include a brief overview of that in that item if you guys would like.
That would be great. I think certainly we should research it. It's very preliminary right now, right? Very preliminary. And but we should know what this is about. It's out there. Other municipalities, neighboring cities are apparently joining this bank. So I don't know, does it rise to the level of potential future work plan items, or do we want to just have eventually, I think we need to have an agenda item to just talk about the banking environment in general in light of the Silicon Valley Bank failure and some of the other troubles, right, that have been happening with banking. So maybe we could include it as part of that. Okay, so then is there anything else that we would want to change or other modifications to the work plan? No? Okay, so Cassie, do you have the actual Word document? Who's the owner of that? You are? Okay. Do you want to send that to us and we'll mark it up, or can you mark it up, or what should we do?
I'll mark it up and then send it to you to review to make sure that you agree with the changes, and then we can go from there.
Okay, that sounds great. Is there any public comment on the work plan? Okay, then so that brings us to item number 7, future agenda items. So this is where you can, anyone on the committee can make requests for future agenda items. Does anyone, I have a list, I have a list. Does anybody have items they would like to get on a future agenda?
Well, what I would like to have at the next meeting is a schedule of our meetings for the rest of the year, listed month by month, with key benchmark. So have a calendar of the 12 months, including in the months that in it that when the city council will be hearing something that we should have reviewed, so that we can see it in and know how to plan out the rest of the year, and so that we can make sure that we don't start throwing in agenda items that could keep us from meeting our goal.
We have we do have a proposed calendar that, that Heather and I had worked on for fiscal 22-23 that had, so the next date is a May 3rd meeting. And the topics on that were biennial budget review, including non-administrative policies and Q3 finance update. And then I had it running through, so May 31st special meeting if required, pertaining to the budget. Then there was a July date to be determined for the Q4 finance update and a November meeting for the Q1 fiscal 24 update. But that's as far as it went. So I think we were running this on a fiscal basis, but we're really kind of on a calendar basis, aren't we?
Yeah, you guys, I think we've also added more meetings since that came out. So let me send you something updated and then we'll go from there.
Okay, that'd be great. So for next agenda, so obviously the budget will be the really big topic. There'll be the Q3 finance budget update. I have a list of things. So I know we're not going to be able to do all these things in the next meeting, but so the pension subcommittee, Mark and I met to update ourselves on the unfunded pension liability, and Mark put together a great memo, which I forwarded to Heather, which we would like to present to the committee and discuss in a meeting soon, hopefully. I realized this next meeting really has a lot on it. And I know that Heather, you said the pension consultant was going to come. Is that at the May meeting?
You're also going to have a June meeting. So I'll get out the schedule so that we can kind of plan it a little bit better. But yes, we have our consultant who does our OPEB and our closed police and fire pension actuarial, as well as they have a module that staff use to project CalPERS contributions and balances and all of that. And they're going to come and kind of give you an overview of what's going on with CalPERS and some of that information. So I figured you could kind of tie your thing in on with that as well in May.
Yeah, so the pension tie-in seems to work with that meeting. And then we also have the dashboard KPIs, which maybe that logically moves to June, the June meeting. We've got the banking discussion. Maybe that moves to June. We keep kicking the non-administrative finance policies down the road.
Those are coming as part of the budget booklet.
Okay.
So by our next meeting, when we have the future agenda items, can we have an attachment that is the list of all the meeting dates and the benchmarks that you were talking about? So we know I mean, I would really, really appreciate that because this is we have so many important dates before the council that we need to hit, unlike any other committee. And what was the thing that Mark was supposed to do with the advisor, what was it, Mark?
So the
Investment.
advisor. Yeah, we just started actually actively investing. I've been working with them, so you'll actually have a presentation from them at some point. And money's coming in. That's exciting.
So that's another one of the things that should be just even, it doesn't, put somewhere so we can see it.
Is that on the work plan? The investment committee stuff, that probably should be on the work plan.
I am not sure, but that will come as part of your quarterly updates.
Okay. So then, in addition to the biannual budget, the Q3 finance update, we'll talk about all things pension at the next meeting, and then also a calendar with a schedule of topics. And then it sounds like probably these other items will need to get pushed back to June. Does that sound about right to everybody? Do we need public comment on future agenda items? Left. We outlasted them. Okay.
So I have one question. When can we get the draft audit?
I will review it and try to send it out tomorrow.
Okay.
Okay, and so on that, everybody needs to just review and submit your comments directly to Heather because we can't discuss out of our meeting. So the next meeting date is set for May 3rd, 7 PM again. And I think that's it. There's nothing else, right? Okay, 6:43 PM, this meeting is adjourned. Thank you.